Pretoria Portland Cement was established in 1892 and has 8 cement manufacturing facilities and 3 milling depots in South Africa, Botswana and Zimbabwe. It has more than 50% market share in South Africa. PPC also produces aggregated metallurgical grade lime, burnt dolomite and limestone. PPC has a market cap of 17 billion rand, a price to earnings ratio of 16 and a dividend yield of 4.8%. Well, we had news out yesterday, Paul. PPC getting a new CEO next year.
Yes, my old friend Ketso Gordon. He's a fabulous guy, one of the funniest people I know. He was in the old sort of government circles, and then he was with Rand Merchant Bank in private equity. A great choice for them. It's difficult though. I mean, I like the business and I like where it's positioned. Unfortunately though, it's prone also to earnings cyclicality. Because of the long lead times in terms of kiln construction, there's a tendency for them to expand and then to have periods of downturn. They do have a dominant position in the South African market, but there is increased competition, inter alia from the Chinese building a plant in Brits and so on and so forth, imports. I think they're trying to go into the rest of the African continent. But I think, well, it's going to be interesting to see what Ketso can do. He's a bright guy.
They'll be faced with the likes of Dangote Cement on the African continent. What do you make of PPC right now, looking at the share price? It's not trading at the levels that we were seeing in 2008.
Yeah, I think, look, number one, you know, they kind of missed the boat in 2008. They didn't put the price increases through when they should have. And at that point in time, there was huge demand for cement. And we saw lots of new listings in that sector like Witten, etc. You know, we think PPC has got a very strong underpin in that close to half their cement, about 40%, goes into residential construction, which we see starting to recover in South Africa. It's not going to have a very strong recovery, but there is starting to be movement there. Social grants as well help in that. A lot of the rural areas, the guys get their social grants, they go to the likes of the cash pools, etc., and they buy cement and they continue to build. So I think, you know, if you look at PPC, it's a geographic story in that the Western Cape is doing very badly. There's just no activity there. KwaZulu-Natal is doing okay, but they're not dominant there. It's Natal Portland Cement, and the imports are coming in, but more to Maputo and Durban. It's very bulky cement. It's hard to transport it up to the reef. I think there could be a game change in terms of Sepaku coming in, but I don't think Sepaku would come in and smash prices. I think they wouldn't go to a price war. They'll just, it's going to be an oligopoly, you know, like almost a monopoly.
Sepaku is looking to build a
plant in Mafeking with Sepaku, and I think it's with Dangote, and I think at the end of the day that they'll maintain pricing. So going forward, I think that the dividend is secure. We like the new CEO. We think they've got a reasonably good story in terms of expanding into Africa, and they have built more kiln in Dwaalboom, so they have upgraded. And I think, you know, a lot of their plant is quite old. You know, some of it you have to realize it has to be decommissioned going forward. And I think longer term, the story in South Africa, there is a huge demand for housing. There is going to be more development going forward. There is a lot of foreign money looking to invest into Africa through South Africa. You know, you have Pick n Pay saying now that they need to build they've got a 50,000 square meter DC. They've got to build a 500,000 square meter DC, you know, north of Johannesburg. You know, all these things. Plus, cement goes into everything, be it roads, be it any kind of residential, anything that has to do with construction or infrastructure, you need cement. So I think it's got a good underpin long term. I think the story is reasonable.
Hot or not?
It's mildly hot. Better, definitely not as hot as Bidvest, but it's hot.
But it's hot. Paul, hot or not?
Yeah, I quite like all of the themes here, but in our lives we decided some years ago that we would avoid stocks in sectors that had cyclical earnings. And so if you wanted to make an early entry into the sort of construction type trade, rather than going for the contractors, I'd say go for PPC. But I'm regrettably going to go with not hot because I fear it could be a bit of a sideways performer still for quite a few years.